Hello, this is Mike Swanson, Wall Street Window. I'm speaking of David Skarica, who runs the website addictiveprofits.net. How you doing today, Dave?
Hey, good, Mike. How you doing?
Oh, I'm doing good. Well, this is an interesting day. It's Wednesday, December the 28th. We only got 2 more days left of trading, and it's commonplace for people to sell losing positions going into the year for tax reasons and hold on to their winners and wait to sell them to next year to defer taxes. However, last year that didn't really happen, and there's a little bit of a drop the last 3 days of last year, and then of course we had the decline into February, and now today it almost seems like the market could start to come off the high already. Not wait to next year. One thing that has me concerned about the market action today is the stock Nvda, one of the most popular stocks now on Fast Money and the Kramer Show. But it was up 5% yesterday. It's actually the top gaining stock in the NASDAQ 100 year to date, but it was up like 5% or something yesterday, and it had a huge reversal, gave up all the gains of yesterday, and did so on 50 million shares of volume. And if a stock like Nvda, which is like the big fad stock of the moment, if those people aren't going to wait to defer taxes till next year, then maybe the market's topped for now. What do you think?
Well, the thing about Nvda, which is interesting, now just as a disclosure, this is actually a stock that we have puts on in my service. We just bought some January 2018 puts on it. But one reason I started looking at Nvda as a bubble stock last year, because this stock has had like three defined booms and busts in the last 20 years. It blew off during the dot-com bubble. And then it blew off during the 07, top and the housing bubble. And then it also had a mini blow off in 2011. And then now it's had this is the biggest, actually, just so you know. This is even bigger than the dot-com bubble blow off that it's had recently. So this kind of seems to be a boom and bust stock. And just so you know, in 2002, this stock went from $22 to like $2 a share. And then in 2007-8, it went from like $35 to about $4 or $5 a share. And then it went from about $25 to $10 a share in 2011 to 2012. So this stock has this history of having these huge ramp ups and then these huge collapses. And this is easily the biggest of the ramp ups. And there's the reason being is they do a lot of the electrical work. Computer systems and chips for Tesla's cars. And of course, with Tesla having this new car coming up, there's excitement that they're going to get a lot more sales in those. And they also do a lot of chips that are done in like computers and laptops you play video games with. And that's really the only segment of kind of the PC market that's growing. And so that's kind of, where people are getting really excited over the stock now. But if you go look at a chart, it is the craziest, most parabolic chart you've ever seen. This stock was still a $20 stock in the middle of 2015, and it's now 109. And like you said, there was a big outside reversal on huge volume where the stock was up $7 on the 27th, and then it was down $8 on the 28th. And that technically usually is pretty bearish. So I would think that this stock is kind of blown off like that, and really, these stocks can go down fast. There were some similar kind of blow-off stocks I was shorting in 2014. There was a stock called Bit Auto, which is a Chinese online company that sells cars online. And then there was another company called Skechers, which is the shoe company, which blew off like this in 2015. And Skechers went from 55 to under 20 in a year after that. And Bit Auto went from almost 100 to about $16, $17 a share. So when you usually have these kind of parabolic moves, the move downside can be quite vicious. And Nvidia's going to have competition. Like, they're kind of the first to the game in the electric cars, but BlackBerry's really getting to electric car technology, et cetera. But I think what you're talking about is really interesting. Forget the fundamentals of it, are the psychology. But yeah, Jim Cramer pumps this stock every day. Everyone is bullish on the stock. And if you just looked at the stock's chart, you would think this is completely crazy. This stock is going to crash. But you look at the commentary on the financial pages every day, people are really bullish on this company.
Well, December of last year, I remember very vividly watching a CNBC segment, and people on there were saying you only need to own 5 stocks. At the time, the market internals were very bad. In the fall of 2015, most stocks weren't doing very well at all. The Russell 2000 actually declined in December. And in December, someone on there said, you only need to own 5 stocks: Facebook, Amazon, Netflix, Google, and the rest of the market's bad. And now those 5 stocks aren't really doing anything anymore, not since the Trump election. Most of them are on support levels and look like they could break them and have some sort of a dip. So now it seems to me like instead, actually I've heard someone say this, I can't remember if it was Kramer or someone else, or it might have been someone on Yahoo Finance, but I saw someone say, forget FANG, only buy Nvidia. So we've gone from only owning 5 stocks to only owning that 1 stock. But the real important thing is those 5 stocks are no longer 5 stocks you must own. And the 1 stock, you can't just, think, oh, I'm going to buy this one thing or these five individual stocks. And, it just doesn't work 12 months later.
Yeah, I think that's what's kind of interesting. And now you're seeing people change up, and it just shows you how these people are momentum players and just follow stuff that's hot, because now people remember too, like in 2014 and 15, people were pumping stocks like Fitbit and GoPro, and now these stocks are completely dead and have collapsed, and you don't hear about them anymore, right? Like Fitbit went from 50 to 7, and GoPro went from 90 to 9, right? So these stocks completely collapsed, and you haven't heard about them anymore. Sorry, GoPro went from 60 to 9. Sorry, but anyhow, or was it at 90? I'll check it. But anyhow, that's what kind of happens. Yeah, no, GoPro was 90. Yeah, so that's what happens. These companies collapse. I remember people 2 years ago, 3 years ago, pumping the 3D printing stocks, and they've collapsed too. So this is what seems to happen: is that you get a stock or a sector that's hot, and then everyone just wants to tell you to chase it. And remember, there's a great saying by John Templeton, not just Maximum Pessimism, but bull markets die on enthusiasm. And you can just see that in these individual companies, that the news is always fantastic at these tops, right? And so you can't think the stock can go down, because you'll be like, oh my God, its earnings are growing, this company's blah, 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 it's so great. But that's when the good news is all priced in, right? So that is usually when those stocks top, and then will tumble a great deal. And I always think about BlackBerry, because it was funny. I was just watching over the holidays. I watched a couple of those movies about the financial crisis, like Too Big to Fail or The Big Short. And it's funny because when you watch those movies, everyone's using a BlackBerry in the movie, right? Because the movie's supposed to take place in 2008, and you just think to yourself, well, a BlackBerry then was like an iPhone now. Yeah. Everyone had them. It was like the dominant thing. No one ever thought they were going to lose this market share. And what usually happened then actually is a BlackBerry was tied into a company's or the government system. So you kind of had to use them because you couldn't get your own phone in on their system. So that's what I'm saying, though. But that's when all the good news was in. I think BlackBerry was $130 or $140 stock, and now it's $7. So that's kind of my warning now, is you may think that this stock's the dominant player and that it can never go lower, but history tells us that these things, especially in technology, are very fickle, and you're going to get competition, and people are going to come in. Like you look at Tesla. This is another hot stock, and it has to do with Nvidia, because Nvidia does some of, like I said, some of the computer systems for them. Well, now we look at Tesla and we see that GM and Ford and BMW, all these companies are doing electric cars. So they're going to have a huge amount of competition in the arena, and they're going to lose market share in that arena. And then the stock price is probably going to tank, And, look at Netflix. You've got Amazon and Hulu and all these other companies doing streaming video as well. So they're going to lose market share to them. So a lot of times these companies, which are, the hot companies because they're dominating some sector, kind of can fall,
Well, I think the chart of Amazon is a good indication of the stock market right now. It's got support at 750, and it's just floating above that level, and resistance at 800. And I think if it breaks 750, it's probably going to go down to 700 or 650, and so will the rest of the stock market. It doesn't mean we're going to get a crash, but I think we could easily see a dip, and I think people should get themselves positioned to take advantage of a dip by doing some selling now, so that they can buy back later or buy whatever is holding up, what the sectors are that are the best. Because I think stocks like Amazon, Facebook, and these things that were touted so much for so long, they've kind of run their course, and there's new leadership that people should buy or just move their money, and the only way you can do it is to do some selling, and you either sell now or sell. You don't want to be one of the people that always chases. As you mentioned, the video is so popular. I think it's just popular because it goes up, because it's gone up, and the more something goes up, the more people want to buy it. When they should be, looking to buy dips.
And the perfect example, as I mentioned, Skechers, is people don't need to have some fancy new technology to get excited about these stocks. Skechers makes shoes, right? Crocs was a hot stock in 2007. Hello?
Yeah, it was.
They make shoes as well. And so it's just more people get excited because the news is good and the stock is going straight up. But yeah, I agree. I really now think we're in danger of a pretty good size sell-off, because I look, and both of you and I kind of turned bullish right after the election because we thought there would be this repositioning going on because of the Trump victory. But the problem I have now is I look at every indicator I watch, from Investors Intelligence showing 3 times as many bulls to bears, the VIX being in the 12s, having a 12 handle. The Ridex ratio, which is a ratio of bull funds to bear funds, now showing 6 times as much money in bull funds as to bear funds, even higher than it was at the 2000 top in the stock market. So now, I just think that when you're seeing these technical indicators and psychological indicators going to such an extreme, it's time to get really, really cautious, and maybe time to get defensive, or even time to start shorting. I think that now we can see this. And look, crashes don't happen in February and March. Just history shows us that that's not the case. They usually happen in the fall. But we could start, again, the topping period, going on here in the first or second half, the first half of the year, and then maybe really start to fall in the second half of the year. We don't know how it's going to play out. What you got to really watch is, on a correction, watch how these technical indicators act. If they just get slightly oversold and the market bounces and they get overbought again, and the market doesn't go to new highs, it's probably a sign that we've topped. If you get a correction and then everything gets really oversold and everyone gets really scared and the VIX really spikes, it's probably just a sign that it just is a correction. But right now, I think we're kind of getting danger signs with how bullish everyone is right now.
Well, if you go back to the beginning of the year, if me and you and everyone else listening to this could go back to January the 1st, 2016, the thing to have been done would be to have cash, and so you're ready for the pullback that came at the beginning of this year to buy. Instead, people were fully invested, the market fell, they got in panic, and when those, and it hurt people. But if people had some sort of cash at the start of the year, the whole year could have been set up for them differently. And I think that's the case right now for 2017. So I've got some cash now, and that's what I think people should do, really have some cash, because that's a position that you can use later next year when the time's right.
Yeah, and in terms of shorting, like I mentioned Nvda and I mentioned SKX, you look at these stocks, now these two stocks, or you look at the 3D printing stocks, these stocks have absolutely collapsed, even though the market has continued to go to all-time highs. So what's interesting about these kind of stocks, and it's always tough to time it because, Nvda was parabolic at 60 or 70, and it's even more parabolic at 110, right? So, but it's always tough to time it. But once it looks like you've got that parabolic blow-off going on, those kind of companies are going to probably collapse regardless of what the market does. And of course, if the market falls, they'll collapse kind of even higher, right? And by the way, if you look at Nvda, for example, it kind of had like a similar blow off and really heavy volume in the summer of 2014, and that ended up being the top. And like I said, now the stock is $19, and it was over almost $100 at the top. So these kind of stocks are really, really going to collapse. And I would think that Nvda is probably going to collapse regardless of what the market does. So that's kind of that's kind of it right now. So it's just tough to time it.
Well, this will probably be the last time we talk. The rest of the year is only 2 more trading days left, so I'll let you go, and unless you have anything, final words you want to say for the year.
No, I think that's about it. Is that I think I would say really be careful right now, because you don't want to be the boy who cried wolf. Like every time this market's refused to really go down in the last 7 years, been unbelievable. But I would just say, with the amount of enthusiasm, seeing the amount of bullish sentiment, the indicators all being overbought, we are in danger of something really happening badly to the downside. So be very, very, very careful of that here kind of going forward. And I think that the other warning in that is, again, bull markets die with enthusiasm. And the one thing we didn't get, even though the market was going straight up for 6-7 years, we didn't have that kind of climactic euphoria and enthusiasm. And I think this kind of Trump election and people think that all this stuff is going to happen has kind of now led to that enthusiasm where the market is going to be vulnerable to a good-sized pullback.
Well, that's going to, I think, make for great opportunities next year. One thing, the volatility vanished in the summer, and now we got it back, and that makes a great environment for people to trade.
Actually, that was my final note, that I really think we're ending the no volatility era. I know the VIX went back down on this rally, but I really think because central banks are now going to be less involved, that is going to lead to more volatility, because central banks try to take away all the volatility, and we're going to have a more volatile time period in the markets.
Definitely so. Well, thanks for talking to me and everyone else, and on to next year.
Yeah, thanks for having me.